This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. It is Wednesday, August 19th, and welcome to the Bessent Put. So we basically have the dollar yen all of a sudden this morning just rolling over 0.5%, 0.57 right now. It hit a low of 158 and change, literally. Now, what's the cause of all that? Because I happened to be right here when it was happening, and obviously the dollar dumps, the yen spikes. When the dollar dumps, we get gold exploding higher, we get equities exploding higher. You can see how this works, right? Oil softens, yields soften, and that's called the Bessent Put. So what did he do today? Well, it just so happened I caught it a little bit live, like I said, and we've got all of a sudden dollar yen, boom. And then that intervention, wasn't quite sure at the time what had gone on, but sure enough, we've either got higher yields attracting deployment of cash, which is dollar falls, yields move higher because they're rotating into higher yielding instruments, or we've got the Bessent Put, which is exactly what happens. And basically there is a Treasury announcement that explains we've got a basically yield curve control in full view. The U.S. Department is increasing by at least double the size of liquidity support buyback operations for longer dated nominal coupon securities, a 10-year to 20-year sector. Current maximum size of $2 billion per operation will be at least $4 billion per operation. The change is effective September. Right now we have a current facility that was under Powell that was going to be winding down under Warsh, if truth be told, but now, nope. This is going to be picking up speed. Fed has kind of lost control of the long end as rates are rising, and corporate bond issuance with it, with the rising AI capex spending, and that has attracted money that would go into normally lots of Treasury auctions. So Bessent is backstopping the buying, basically. There's too much supply. We need more buyers. So basically Bessent has said, we're going to do future buyback sizes, quarterly refunding until November 4th, 2026. Anything notable about that particular day? Yeah, it's one day after the midterms. Anyway, we've got buyback operations in full view. So that's what's helping the market right now with a sizable bounce. And this is all about, quote unquote, greater liquidity support. But I want to also remind, and this is totally the reason for the season. Bessent intervention is a market mover. The buyback through November 4th is politically contrived midterm election coverage. They want the market buoyant, and that's all there is to say about that. So now this morning we've got intervention with the yen spiking, the dollar dumping. This is what it looks like on the daily. This is Bessent's intervention, even though it doesn't start until September 9th. He's announced it, and the market always front runs. We still have issues in the oil patch, which is stronger crude, not to mention crack spreads are in the 80s. The regional one is in the hundreds. But the point is we definitely have unprecedented pricing in crack spreads, which has helped the refiners, no question about it. Look at the crack ETF, right? Wow. Be careful of that being a potential fast pullback. But for right now, crude is about ready to take off or not. Definitely the 10 and 2-year yield curve, as it was approaching that 55 basis points, actually it hit it. And then it came down sharply with the dollar intervention. So basically yields are falling, bonds are rising on yield curve control by Bessent, full stop. Nothing else to say about that. So anyway, this steepener did move up into my 48, and then I had to update it and give it some higher price targets. Well, now it's obviously got intervention and shake and bake, so yields are softening. Oil, however, is not. So crude getting above this kind of 85 is definitely going to be a risk-off worry. But dollar falling is the ballast that the equity market needs. Momentum might have left temporarily and selling underneath the surface, but this very large dollar intervention is the reason for the season and equities having a pop this morning. So that's it. It's a big deal. Yield curve controls in the house. We'll see all about the bond long end supply actually being rerouted into corporate issuance. And that's actually something to really kind of think about. Here's your dollar yen right here getting tapped down at that trend line. I have painted, we still need to get above 160. A little shake and bake in the Japanese yield, as of course what Bessent intervenes to do in this yield curve control does affect global yields as well. We have gold that's getting above that area. Now, if it sticks that landing, remember I said I can see where we could roll over. Well, right now on dollar dumping, we're having a sharp move higher, but will it stick? That's actually critical. It has to stick above this, let's call it 44, just for ease. It's got to stay above in order for that to really work. Will the yield curve control work? Will silver and gold move higher on this stealth QE? They could. That's what I'm watching. Will equities also like it? Again, we just have a softening right now of oil and yields. We do not have a dump, but we definitely have masterful intervention. Look at the RTY. This 3027, boom, right there. That's intervention. It had just gotten below. And look at it perfectly. Look at the 76.95 for the ES, for the S&P 500 E-mini futures. We had to break 76.95 to see trouble. We had to break 7,700 in SPX to see trouble. We didn't. We had intervention by Bessent. Fascinating, isn't it? All right, dollar continues to dump violently. Market has just done a complete 180. Bessent, again, starting his backstopping program September 9th. Market just realized that. So algos triggered aggressively the dollar dump. We got two things at play here. I think it isn't just the Bessent put, which is only 4 billion. Sorry, but come on, size matters. And it's not a lot. But this dollar dumpage is exactly what Bessent wants. It is huge for trade balance shenanigans as well. And of course, US exporters. But this is not holding. Semis are still selling. SPY is not really holding that little gap either. And yields are still in a range. And oil is still in a range. Oil said whatever. They didn't care. And yields, honestly, come on, big picture, they're higher. Anyway, I think that's what's stealing some of the thunder and why Bessent is coming in and why it's actually a bigger issue for the dollar. What if the money on the sidelines, or better put, money that's not earning any interest, seriously, it's in cash, starts to go and say, hey, wait a minute, you got some massive opportunities here in the earning side in corporate issuance. Let's go there. It's a fixed income free-for-all right now. You want to go buy treasuries? You want to go buy some meta bonds at 7.5%? I don't know. Just to me, dollars dumping on intervention because of the yen for sure, but also could be moving away from treasuries and into corporate issuance because they have sweetened the pot so much. Anyway, we'll see what happens. That bears watching for sure.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.